Welcome to this tutorial on VUG versus VOO, a comparison of two popular ETF funds in 2025. In this guide, we will break down the key differences between these two investment options and provide you with the information you need to make an informed decision. First, let's start with the basics. VUG and VOO are both exchange-traded funds, or ETFs, offered by Vanguard, a well-established investment management company. VUG tracks the CRSP US Growth Index, which focuses on growth stocks, while VOO tracks the CRSP US Total Market Index, which covers the entire US stock market. One of the main differences between VUG and VOO is their investment approach. VUG is designed for investors who want to focus on growth stocks, which are companies expected to experience high growth rates in the future. On the other hand, VOO provides broad diversification by investing in the entire U.S. stock market, including large, mid, and small cap stocks. In terms of performance, VUG has historically been more volatile than VOO, with higher highs and lower lows. This is because growth stocks can be more sensitive to market fluctuations. However, VUG has also provided higher returns over the long term, making it a popular choice for investors with a high risk tolerance. Another key difference between VUG and VOO is their sector allocation. VUG has a higher allocation to technology and healthcare stocks, which are typically growth-oriented sectors. VOO, on the other hand, has a more balanced allocation across various sectors, including financials, consumer goods, and industrials. When it comes to fees, both VUG and VOO have relatively low expense ratios. VUG has an expense ratio of 0.04%, while VOO has an expense ratio of 0.03%. This means that for every $100 you invest, you will pay 4 cents in fees for VUG and 3 cents in fees for VOO. So, which one is right for you? If you are an investor who is looking for growth and is willing to take on more risk, VUG may be the better choice. However, if you prefer a more diversified portfolio with broad exposure to the U.S. stock market, VOO may be a better fit. In conclusion, VUG and VOO are both popular ETF funds that offer unique investment approaches and benefits. By understanding the key differences between these two funds, you can make an informed decision that aligns with your investment goals and risk tolerance. Remember to always do your research, consider your financial goals, and consult with a financial advisor if needed.